The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, let's dive in and take a look at how the week in the market trade treated us here after Friday's session and getting an idea of just how this market is looking. Spring planting season obviously is here in many areas. Maybe that's a little bit of weight on some new crop contracts while we are watching some demand with old crop contracts. There's just a lot of things to unpack here. And here to provide some perspective and insight for us today, we welcome in Ted Seifried, Zaner Ag Hedge. Ted, good to catch up with you, buddy. Thanks for being on the show. Hope you're doing well.
Yeah, I'm doing great, Jesse. Thanks for having me. Always a pleasure, man.
Let's dive in, and I'll just kind of start with what I mentioned. An interesting week in the markets. Spring planting season obviously rolling along a pretty rapid pace in many areas. I have to think maybe that weighing on some new crop contracts, both corn and beans this week. On the flip side, on the old crop side, though, I know we've seen some of that spread action, the inverses, some news and some moves there. Old crop maybe tight balance sheets. Some end users trying to get some corn or beans out of farmers' hands. So I don't know. It's been an overall quiet week, but it feels like that's maybe one of the biggest things I'm watching in this corn or bean trade. What are your thoughts about that, Ted?
Yeah, like you said, there's a lot of spread activity this week. Part of it is because the narrative kind of changed on planting a little bit end of last week into this week, right? We have this big warm-up that's happening. For all the states, Northern Plains, Dakotas, Minnesota, that had that tremendous amount of snowpack, it's all melting really rather quickly. You prefer to have that sort of slow roll so that it gets into the subsoil really well. But, I think they're going to get a pretty big benefit from subsoil moisture. There's obviously going to be some runoff as well. But I mean, just 10 days ago, we were thinking, oh, we're never going to get a chance to plant corn. But now it's looking like, okay, yeah, we're going to. So that has put a lot of pressure on new crop corn and new crop beans to some extent too. While at the same time, even though you didn't have a super bullish USDA report on Tuesday because they left carryover unchanged for both corn and beans, we're still at a point where we really can't tempt a whole lot of new exports, especially for soybeans, right? And we still had a positive number on this week's weekly export sales. We haven't seen any daily wire sales, but it was still a positive number on this week's weekly sales number. I think beans are just, old crop beans are a little reluctant to have that big sell-off just in case China were to come in and buy 500,000 metric tons or something like that. So, yes, kind of a little bit of a narrative change on both old crop and new crops, and that's manifested itself in a lot of movement on the spreads here this week, with old crop gaining on new crop because, again, different sets of fundamentals there, at least from the feel of things right now. And then corn, we saw a pretty decent sized sale for China on Thursday morning on a daily flash sale. And then again on Friday, this has everybody kind of wondering, hey, is this the start of, what we saw a couple of weeks ago where we had 11 daily sales to China or unknown destinations out of 12 trade sessions? Are we going to do that again? Right. And the market at least has to respect that as a possibility. So old crop corn finding some strength on that, even though we do need those sales in old crop corn. I think, the excitement or anticipation of that is keeping old crop corn fairly well stable or higher,
Well, and something too on the corn side, I've been hearing some chatter of some localized basis levels, some pretty lofty numbers there, especially on corn. Maybe not necessarily posted bids, but maybe elevators saying to a farmer who might have 500,000 tons in storage or something, saying, hey, what if we give you X amount for some of that corn? So I'm hearing some of those opportunities out there as well right now, Ted.
Yeah, absolutely, Jesse. Go back to that last quarterly grain stocks report that we saw a few weeks ago. Both the stocks in corn and soybeans are lower than they were this time last year, but it's where they're lower at. It's the commercials, it's the end users, or stocks in commercial storage. That was the number that was way down. Stocks on farm was down a little bit, but not comparatively speaking. So, yes, to your point, Jesse, it's been a struggle for your crusher. It's been a struggle for your feedlots to get that product out from the hands of the end user, or I'm sorry, for the hands of the producer, and therefore you've got that good basis number right now. I mean, really, the last few years we've had a situation where if you wait until harvest, you've been rewarded for that. And so, we learn by those things. I have a feeling this year is going to be a different story, Jesse. I worry that our exports ultimately might not be there. I'm a little bit worried about ethanol for corn. I'm a little bit worried about the crush for soybeans. We'll see more on that next week. But at least for the time being, it's been a good thing to hold, right? I mean, and that strong basis is reflection of how tight it is in the commercial hands.
Well, Ted, thinking here, it's a busy time of year for obviously spring planting. Farmers, their focus is getting into the field where they can, getting this crop planted, but we don't want to lose sight of our marketing either during a busy time of year. So what are some thoughts you'd have, corn and soybean wise, risk management maybe here as we're getting into this busy time frame? Do you have any thoughts there, Ted?
Yeah, Jesse. For one, old crop, corn and beans. A lot of times spring is like this time of year, right around now, is either the second highest peak of the season, or maybe even the highest if we don't have any real weather concerns during the growing season. So with that strong basis that we just talked about, I think there's a pretty good opportunity there to be selling a bit more of your old crop. As far as new crop is concerned, that's the one that's been under pressure and hasn't had as significant of a bounce. So it's a little harder to justify that. But once again, I think it is an opportunity to be selling more selling more new crop. I'd like to see guys upwards of 50% sold at this point. But we can also come in and re-own calls, basically create a synthetic put so that we have unlimited downside risk management. But we still have some opportunity to take advantage of a summer weather rally if we get one. You got to say, though, this isn't a year where we're really expecting a whole lot of problems for the growing season. I mean, you never know, Jesse. I say it a lot. You trust a long-term forecast about as far as you can throw it. But also, in the bigger picture, with the transition from La Nina to El Nino, the confidence on El Nino growing now to 60% chance going forward, you feel like historically that's generally been a pretty good growing season for row crops, with the exception of 2002. So yeah, I'm not twisting guys' arm for reownership this year like I was halfway through the growing season last year, or certainly the year before that, for different reasons, 2 years ago, by the way. But that's always an option, right? If you're not comfortable with making the sales where they are right now, okay, well, we can either buy puts or create that synthetic put. But one way or another, we need to protect the downside, because we have to realize that we are trading on the historically high end of the range here in corn and beans. And if things were to go down sharply, i.e. we have a really good crop and the economy's, a lot of people talking about recession. I don't know if we'll ever see that or not, but there's a lot of things that can happen to give us lower prices. There aren't as many things that can happen to give us sharply higher prices because of the price levels that we're already at. So you have to realize that, and you have to act accordingly.
Ted, in the wheat market, a decent rebound on Friday. Feels like the biggest headline there this past week has been the Ukraine grain initiative and Russia coming out saying they're not going to extend it unless certain concessions are met. Do you feel like that's been the biggest driver in the wheat market this week?
There's always weather, but yes, that has been a big influence, right? And Russia is certainly talking like that grain deal is going to end March 18th. In fact, they've come out and actually said, we don't think it's going to last past that, because our demands, I guess, they don't feel like they're going to get met. And what they want is they want sanctions lifted on Russian grain exports, but more particularly, they want sanctions lifted on Russian fertilizer exports, which it occurs to me might not be the worst thing in the world for us. I mean, yes, we don't want to do business with Russia because of the situation and so on and so forth. But if that's the sacrifice that we have to make to keep the grain corridor open, I kind of think politically, I mean, I could understand that. Like, I don't think that we would have a whole lot of backlash on that. So it'll be interesting to see how that develops. But at least the concern of that grain deal ending and the rhetoric and the language that's being used by Russia, that has to give concern to the market. And you see it in corn too. I mean, corn, finding decent strength on Friday, partially because of that, and also the continuing sales to China. But yeah, wheat taking back Thursday's losses on Friday. Maybe, Jesse, this is an overall longer-term bottoming formation in the wheat. It was a situation where after Thursday's bigger down day and closing close to those lows, the door was open for a big flush out and another leg lower to the downside beginning on Friday. We didn't do that. We bounced. And that's a good sign, at least giving some hope that wheat is still trying to carve out that longer-term bottom.
We are having a conversation today with Ted Seifried of Zaner Ag Hedge. Ted, let's move over to livestock. This cattle market's been on fire. End of the week, taking a little profit maybe on the board, I wonder here. But still, cash activity has been just robust and on fire, and really feels like the cash market's been the leader here throughout cattle. What's your thoughts on this cattle trade?
Well, cash market should be the leader in cattle. And when we talk about cash, we can talk about cash cattle, but we can also talk about box beef, and both of them are in fuego, right? I mean, they're both really hot and heavy. What is it? Wednesday, we had cash cattle trading 180, 181. Mm-hmm. Wow. By the way, that leaves the June at a rather stiff discount, trading, closed Thursday at 164.50, but, Friday was trading in the 163s. So there's a big discount between the June board, and where that cash cattle is trading, which suggests that as long as we don't see a major collapse in cash cattle, that the board still has more work to do to the upside. And with box beef prices as good as they are, profit margins are there, packers margins are there. So that would suggest that there is either more upside potential or good reason to keep cash cattle prices where they're at right now. So, I think more than anything else, Jesse, we had gotten a little more than just a little overbought in the futures markets. So we needed to take a little bit of a breather. But, the fundamentals seem to be there. Although we had really kind of pitiful export sales, on the weekly export sales number that we saw on Thursday, 87,000 metric tons. That's not good. Well, you know what, though? It really has never been the export demand for beef. It's been the domestic demand, which stays really rather strong throughout all this talk of recession and higher interest rates, people not spending as much money. Well, for the most part, we're doing it. And, we have a cushion for that to some extent because of the lower supply that we have out there. So you still have fairly bullish fundamentals, and that's what's keeping that cash market really propped up and continuing to go higher, right? Again, I think these are all really good signs for the cattle market. And for the most part, Jesse, from a technical standpoint, when we look at bull markets, there's bull markets that are in their infancy, where they just kind of very slowly have fits and starts, where they're trying to start in an uptrend and then finally kind of break out to the upside. And that can be a very awkward time frame for a chart, give you lots of different conflicting signals until that breakout happens. Then you have a market that is in the middle of its rally, where it has this sort of very well-defined upward trending channel, and not these huge up days, not a huge amount of volatility. That huge amount of volatility always comes at the tail end, blow off tops, reversal highs, things like that. We started to see a little bit of that at the end of the week there, Thursday and Friday. But not to the extent that you want to say, hey, this is sort of, a mature bull market, an aging bull market that may be coming to the end of its lifetime. I don't think so. I think what we're looking at right now in the cattle market is a middle-aged bull market that's got some longevity left in it. I like the organization that we have in the charts. Yes, we left a measuring gap, and it might not be something where we're going up and above where cash is currently trading. We might not make 182, for example. But from the 163 and change, 163.80 that we were looking at on Friday, I think there's more upside potential than that, as long as there's not some catastrophic event that happens macroeconomically.
How about this hog market, Ted? I keep wondering and calling for a bottom here. I'm going to stop calling for a bottom. I mean, anything good to say in hogs here right now, Ted?
Well, I think the December has. I don't know. Yeah, no, you're right, Jesse. I mean, we had that period of time from the middle of March to the beginning of April where we had really been kind of trading sideways, trying to carve out that bottom. You had hopes that maybe this is a longer term low, and it just wasn't the case, right? And the June kind of broke down into new lows, and that's where we were Thursday. Friday, we tried to basically tread water. That was really the best that we could do. You got to think that at some point, not only are we getting very oversold with relative strength index under 30%, that's an oversold condition, but also you think we're getting maybe a little bit below value. Yeah, we know that we've got extra supply up front, but further on down the line, that there's not as many animals out there further on out. And you think domestic demand is going to stay fairly good. Yeah, that 27,000 metric tons that we saw for weekly export sales wasn't amazing. It was down pretty good from the previous few weeks, but it wasn't 87,000 like the cattle. So that's good news, I suppose. But yeah, I mean, it's kind of like the wheat market, right? I think there's a number of us that can tell you about all the bullish fundamentals that are out there. There's negative ones too, but I can give you a list of bullish fundamentals that are out there or could potentially be out there. But yet the chart doesn't want to respond to that. And until we get the chart to give us a sign that, hey, maybe the lows are in, then we can really start talking about the bullish fundamentals. But for right now, I think you're still on your heels. You're still playing defense in the hogs market.
Well, Ted, great thoughts. Any final thoughts for us here as we wrapped up the week of trade?
Lots of questions about what the Fed's going to do. We're about 3 weeks out from that. But you see Fed funds really arguing that back and forth every day, and you see the talking heads on TV and things like that. I think the Fed's going to continue to raise interest rates, and I really do wonder if that's going to put a lot of pressure on us going into late spring, early summer. Then again, like we mentioned a few minutes ago, there's been all this talk about, oh, this recession's coming, it's going to be a bad deal. Look at all these negative indicators, and it really hasn't happened. So I don't know. How long do we talk about something before it happens, or just doesn't happen? So I think there's a lot of really interesting things that we're going to have to deal with during this growing season in the middle of the summer and things like that. A lot of macroeconomic things, certainly the normal weather type things. But it's another year, Jesse, where we got to keep our heads on a swivel, because on any given day, we're not exactly sure what's going to be affecting the markets, whether that's individual grain fundamentals or livestock fundamentals, or whether it's this big bag macroeconomic issues, banking crisis or whatever. Who knows? Who knows what the next big thing is going to be? But it's certainly a very volatile macroeconomic climate, and it will be, I think, throughout this growing season.
Well, Ted, if folks want some advice and they want to reach out to you there at Zaner Ag Hedge, what's the best way to reach you, Ted?
Absolutely. You can reach me directly at 312-277-0113. Aside from that, you can find us on the web at www.zaner.com. And you can also find me on the Twitters. I'm at the Ted Spread.
Ted, always great to catch up with you, buddy. Thanks for joining us here this week, and we'll talk to you again soon.
Pleasure's mine, Jesse. Have a great weekend. Talk to you later, buddy.
Ted Seifried, Zaner Ag Hedge, our guest today here on Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great weekend.